Hey, money actors. How many of you remember those huge lines that Star Wars had when it first opened in 1977? Well, I don't because I was only 1 years old. Actually, I was under one, maybe 5 months, 6 months old or so. But I do remember them when I was younger. You can check out these huge lines that happened back then. And we're seeing something similar today, but not in a movie, in an asset that all of the world needs and has needed over the last 5,000 years, and that is gold. Real money versus the fake money that we have in our wallets and in our bank accounts. So, what you can see is that gold has been on a bit of a run in the last month or so, and it's kind of been flat around the $2,000 range per ounce in US dollars, and of course, a lot more in other currencies. What is unique about this is gold tends to be the asset that keeps up with inflation. So that if you own it while dollars continue to drop, your gold always maintains the same purchasing power because an ounce of gold is an ounce of gold, whereas dollars get printed out of thin air and lose their value over time. So what you can see is gold has kind of stayed flat for several months. It dipped back in October down to 1828 or so, and then it's kind of remained around the 2000 range. But you can see in the last month or so, it's shot up to about $200 more per ounce. And you have to ask yourself, what's going on here? What's different? Well, of course, we've got these bank failures that have happened over all of last year. What we're seeing actually right now is that banks are still stressed and are in a lot of trouble right now. Now, if you have money in a bank, as long as it's under $250,000, you're going to be fine because that's FDIC insured. If you've got more than $250,000, you either want to spread those out over several banks to keep under that threshold, or there are some accounts that actually take your money as a high yield savings account and spread it out amongst other banks to get a higher FDIC insurance. So you may want to look into that. There's also US Treasuries. Those are usually typically safe because that's who's backing up the FDIC insurance anyway. So as long as you've got that covered, you're fine. But take a look at gold, because gold has a tendency in times of crisis to really shoot up. And gold and silver are probably the only asset classes that aren't part of this everything bubble. So it's the almost everything bubble, except for gold and silver, because they've been artificially held down. But you have to ask yourself, why is it going up right now? And we've got similar lines that you saw in Star Wars in the 70s hitting China right now. Just look at these enormous lines starting at the Chinese New Year last month, and this is what's triggering it. Now, China supposedly only has 2,200 tons of gold as the government. Now, everybody knows that that's probably a lie because they're not actually upfront with their holdings and they're very quiet about it, not like other governments. And that's compared to the United States' 8,000 tons of gold that's held in Fort Knox, supposedly. There hasn't been an audit since, I think, the 60s. So hopefully we haven't sold off all our gold like Canada or the UK. But you look at Russia, Russia has 2,300 tons of gold, and they are more upfront about what they have versus the clandestine China. But if you compare GDP to tons of gold, Russia actually has the most gold per GDP in the world. So when you put the two together, we're clearly, because we've created all this division geopolitically between us and the East, we're putting Russia and China in bed with each other. And together, they've got 5,000 tons of gold and probably a lot more. And when you compare that with the Chinese population that's flooding the market, trying to get as much gold, because they see, obviously, that the Chinese are in horrible danger as well. They've massively spent all this money on ghost cities and whatnot over the years and artificially inflated their economy. And so the Chinese people see that they've got a bunch of these really bad assets and they want to back up what they have with gold. So the problem right now is the United States citizens hardly have any gold, and they hold all these paper dollars that are actually worth nothing, or paper assets in stocks and bonds, mutual funds, all of that kind of stuff. So my recommendation is to have some of the yellow metal, the silver metal. The silver metal is actually even more pushed down, and I would right now, if I had nothing, I'd be diving into silver right now. But you probably want both. Maybe 10 ounces of gold per 500 ounces of silver. That's kind of the ratio I try to keep and maintain. Hold it in a non-bank vault, because if you put it in a bank, they can actually take it from you. So put it in a non-bank vault, or there's other alternatives where you can, if you go to Mike Maloney's channel, goldsilver.com, you can purchase it there. They have these Instacarts that hold in a non-bank vault, and you can actually get it pretty close to spot, which is pretty rare. Or you can take delivery if you want to store it in your house somewhere. You want to make sure that it's hidden. Nobody even knows that you own gold. So be careful there, because somebody could, of course, break into your house and steal it. So be careful there. But there's a new way to not just hold gold and not pay storage fees, but actually create a yield out of your gold. And that is with monetary metals. And you can check out my link below. That is a new way where you can buy gold, lease it out to companies that actually use gold, like jewelers or electronics companies, space companies, whatever it may be that need gold. You can lease it out so that they can maintain their price. Otherwise, if they get hit by these rising prices and they sell at a certain price, they could actually lose money on their trade, essentially, when they go to sell their jewelry or whatever it may be. So you're not actually even giving their gold. You're actually leasing it to them so they can maintain a price. And you lease it out for a year at a time, and you receive a yield in gold. So you're kind of stacking at the same time. So check out my link below. It's a whole other way to collect gold. My position is that you need to have 10% gold backing all of your investable assets. And so that doesn't include the house that you live in. I got this from Jim Rickards, by the way. You can check him out. That doesn't include the house that you live in, but it could include rental properties. So if you have rental properties, it's a good idea. Let's say you put 20% down, 25% down as an investment, but you still owe that 80, 75% on the house, on the rental property. You're getting your income. But let's say something happens, a housing crash, or let's say the dollar collapses. Well, gold is going to maintain its purchasing power so that you don't get wiped out there. That's just on real estate, but you can back it up against everything you have, your stocks, all your paper assets, essentially. So check that out. Try to maintain that 10%. You're good as gold, pun intended. But make sure you get it now before these Chinese lines, these Star Wars lines, end up here in the US or Canada, wherever you are, because they're coming. All right, take care. See you next time.